So, good morning. I'm Joanna Murphy, President of the Coven Harbour Chamber, and you're all very welcome to our workshop on pandemic funding. All you need to know. Many businesses have availed of all or continue to avail of the government supports due to the pandemic. These funding streams have proved a vital life support for companies as they navigate uncharted territory and fight to survive. From the EWSS to the CRSS and everything in between, the various funds available to businesses can be complex and difficult to find and all in one place. So our guest speaker today is Carla Manning from CACM Accountants, and Carla will take you through each of the pandemic supports, explain the criteria for each, plus any pitfalls or things you need to know. Carla is a certified public accountant, statutory auditor, and certified tax advisor. She has been a member of the CPA Ireland since 2000. Carla is owner of CACM, an accountancy and tax practice based in Cork, established in 2009. CACM provides a wide range of accounting, audit, and tax services to clients who are based locally, nationally, and internationally. The client mix is made up of indigenous Irish small businesses and FDI small businesses. Areas of speciality include taxation, inward investment in Ireland, internal taxation, compliance and regulation, corporate governance, audit, strategy, and social enterprise. Carla is an active speaker at events hosted by Munster Technology University in Cork, Local Enterprise Office, the Cork City Council, Southern Region of the Royal Institute of Architects Ireland, and AIB. She has written articles for publication in the CPA Ireland Accountancy Plus magazine and is also a regular contributor to local and national media on various financial and business topics. So Carla, that is absolutely a great CV for sure. You're very welcome this morning. So I'm actually just going to hand you over now to begin the presentation. So again, I just might suggest that you put in your questions in the chat forum, and if you have any for Carla, and she will also include her contact details in that chat forum. So over to you, Carla.
Thank you, Joanna, and good morning, everyone. Delighted to be here, and yes, it's starting to get sunny here now up in Blackpool, so very happy with that. So I'm just going to share my screen now with some slides, and as Joanna said, if you have any questions, if you want to pop them into the chat, we'll try to deal with most of them at the end, but if there's something in between that we can get to, I'm happy to go and we can deal with that as well. So one moment now. There we go. So hopefully everybody can see that now, and this is being recorded, so you'll also be able to get, you'll be able to play back, look at the slides and things like that if there is any information that you want on them. So as John said, we're going to go through the supports and funding available. I suppose we're nearly 18 months in. There has been a lot of stuff that has kind of come out very much at the start. It's been tweaked, it's been updated, I suppose, as restrictions have gone on. Some of the supports were announced back in around May, such as loans and funding and things like that. And a lot of these things still remain in place. And I suppose as businesses now, restrictions are starting to ease. It's important to know what else might be there that can help us to get over the next hump of getting back to normality, getting our businesses ready to really ramp up again. So the different areas that I'm going to be going through are the general business supports and subsidies. I'm going to be looking at loans, finance options, some sector-specific supports, some general training supports that are available pretty much for all businesses, and just some useful information guides that are online as well. So the general business supports that are available, I suppose they continue to remain stable from the initial supports that were put in place, such as the Employment Wage Subsidy Scheme, the CRSS, the COVID Restriction Support Scheme, Tax Debt Warehouse, and from September there is a new scheme being introduced, the Business Resumption Support Scheme. So just to go through what all of those are, you're probably familiar with the Employment Wage Subsidy Scheme. Again, a business had to show that they had a turnover reduction of 30% based on the comparable period. The scheme is going to continue in place up to the 31st of December. And in July, the Revenue did update the requirement for making your claim on a monthly basis. This condition has always been part of the scheme. An employer is to review their monthly turnover against the comparable period to make sure that they mean that on a monthly basis to ensure that they continue to qualify and that the turnover level is 30% or below. What they have done since July is they've introduced this review form online. So now as part of your claim, you need to complete this review form online. The initial form, I suppose, is the one that took a little bit of work because you have to put in your 2019 figures versus your January to July figures in order to make your claim. There was a deadline for completing that. It was initially 31st of July. It was extended up to the 15th of August, where all that information had to be put in. And then every month, as you're making your claim, that will be updated for the relevant month. If you have not already done so, because the timing of having to do this isn't great given the holiday season, giving people that are probably going to be availing of this are in hospitality, tourism, and all of that, you know, peak busy time, peak holiday season for businesses. If you haven't already done it, if you have missed it, get it done as soon as possible, because it can impact your EWSS claim. It can stop it, but if you get it done now, you can just catch up and get that done. Okay, so that's an important thing to understand. And I suppose, oh, sorry there, yeah. So again, just have a look at that. It remains in place up to the 31st of December, and it's a good subsidy. Again, these all get accounted for on when you're doing your tax, doing your accounts. They do contribute to your tax. They're not tax-free payments, they are taxable payments. So the next one there that's still available is the COVID Restriction Support Scheme, the CRSS. Now, it has effectively been kind of weaned off at this point, you know, as businesses are reopening in accordance with public health guidelines. You're not qualifying anymore. Okay, so once a business is able to reopen under public health guidelines, you don't qualify anymore for this COVID CRSS payment. However, before you sign off, there is a restart payment, which is the equivalent of 3-week payment. So you'll get your normal weekly rate plus 2 weeks in addition. And they have increased the weekly limit, okay, from 5,000 up to 10,000 as part of this restart payment. So you're effectively getting 3 times the normal rate. And if your claim was, the maximum amount was 5,000, the rate now goes up to 10. The total restart payment that you can get is capped at €30,000. Once the business has claimed the restart payment, you can't continue to claim the CRSS, nor can you restart claiming the CRSS. You're finished with it then. So it is important just to note, once you do that, be sure that you are finished, your eligibility is ceased, and then get your restart payment before you sign off on that. One of the things that Revenue have recently clarified, okay, and I think this was particularly aimed at the reopening of indoor dining from the end of July, okay, where indoor dining was permitted under the public health guidelines, any business opting not to reopen, okay, for whatever reason, are not still eligible for the CRSS payment, because part of the qualifying criteria is that the business must be restricted under public health guidelines from opening. Okay, so for example, businesses at the moment that may still be restricted, nightclubs, casinos, you may have certain venues, you know, there are still elements that are under public health guidelines not allowed to open. So do watch that. If you are a business that may still be claiming CRSS because you've opted not to maybe open indoor dining for whatever reason, do just watch that. You do have to sign off. You do have to get your restart payment, okay? Now, if for any reason you have missed the CRSS scheme, or you have missed claiming your restart payment, you do have an 8-week time limit to claim it. So unfortunately, you can only go back 8 weeks. So if you were eligible prior to that, you will have lost that opportunity. However, you will still be able to claim it for 8 weeks, as well as claim your restart payment on top of that. So again, if that's something you haven't done to date and you feel you may be eligible for this, do have a look at it, talk to your accountant, they'll be able to help you look at your turnover levels and get that information together. Okay. So debt warehousing. Okay, I suppose the purpose of the tax debt warehousing is to free up cash flow for businesses. And it's a form of interest-free credit, using your own resources, interest-free credit, in order to maintain your business and deal with the other more immediate outgoings that you have to keep operating. When they introduced this debt warehousing system in 2020, it was quite a complicated system that they introduced. It was because it was linked to the phased reopening plan that was announced by government back in May 2020, and all of the different phases were linked to when you were permitted to open under one of the 5 timelines outlined under the phased payment arrangement. As we all know, that kind of went by the wayside. Restrictions went on much longer than anticipated. And so this year they did, I suppose, clarify and simplify the whole process for people, just to go, just to keep it more simple. So at the moment, a business can continue to warehouse tax debt until the end of December this year. Okay, so the tax debt that can be warehoused primarily is VAT and PAYE. On a personal level, you can apply for income tax warehousing as well. Corporation tax is not permitted to be warehoused under the debt warehousing scheme. However, if there is any issue with payment of any tax not covered under the debt warehousing scheme, I would absolutely recommend that you discuss it with revenue. They may allow it to be part on a short-term basis, on a more informal basis, but also they may look at making a phased payment arrangement with you so that that can be done. And the benefit of making sure that you do all that is, if you are looking to make claims under any of the other schemes, as a general rule, it will require the business to have tax clearance. Warehouse debt doesn't impact your tax clearance. However, if you have tax that doesn't come within the debt warehousing scheme, that will impact your tax clearance. So it could impact on other claims that your business may be entitled to. So what happens with all that warehouse debt effectively? So it's all very well, you park it, you don't pay it, you don't have to think about it effectively for nearly 20 months, by the time the end of next year comes. So what happens next with that debt is, from January 22 to December 22, so all of next year, for 12 months next year, you can still leave that debt part. It's interest free. Again, it won't impact your tax clearance. It's by agreement. And that again will free up some time in that you can get the business up and running, get the cash flow coming in, and look at trying to pay down some of that debt. If you can do it during the interest-free period, fantastic. But again, this is going to be on a case-by-case basis for businesses. You'll have to assess your own cash flow requirements, and the longer a business has been restricted, obviously, the longer that's going to have more of an impact on cash flow and resources available. So if after the end of December 22, the debt remains unpaid, from January 23 onwards, the debt, you will have to apply to revenue for a phased payment arrangement. But the interest payable, so any phased payment arrangement will attract an interest charge on top of the tax liability that's outstanding. But for the tax warehousing scheme, it will be at a reduced rate of 3%, and that would be applied to the phased payment arrangement. There's no cut-off time defined on that, okay, because again, phased payments will be dealt with on a case-by-case basis with a business. Every business's needs are going to be different. Generally, with that, you will make a phased payment application. They will typically look for a down payment of between 20 and 40%, and then the balance to be paid off over agreed period. Again, it will depend on the level of debt, the business, and they will assess all that, and they're reasonable. And the best thing you can do for any debt that you might have with revenue is to talk to them. don't bury your head in the sand. Talk to them, because if you're not talking to them, they don't know what's going on, and they have automatic levels whereby it goes through a certain phase and escalation. They have to escalate the debt, which means that it might be enforced. You might fall out of the debt warehousing scheme, and you don't really want to be dealing with all of that on top of just actually running your business and dealing with that side of it. So do talk to them. Your accountant, your tax advisor, they'll be well equipped to deal with them on your behalf as well. So in fairness, you don't actually even have to talk to them yourself if you don't want to. Talk to your accountant, and they will be able to help you, and they will be able to talk to revenue on your behalf. And sometimes, you're taking the emotion out of that, leaving your accountant deal with that. They'll also know how far to push revenue and to try and get the best deal for you. So do it, okay? So do that. So one thing to note, okay, and I suppose this is an unfortunate consequence of the circumstance we find ourselves in, okay? So the debt warehousing, as we've seen, was brought in really quickly. The intention is good. It was to free up cash flow for businesses. It's a way of government supporting businesses by allowing you to use your tax money to cash flow your business to keep things operating during this. Nobody anticipated that we would be in this situation this long. And an unintended consequence of this relates specifically to company directors and their income tax return for 2020. I think it's important to point it out because, again, we're looking down, our next deadline's coming up here and now are the income tax returns for 2022 in October, middle of November. Normally, where a company director has a salary from their own limited company, when they have to make their tax return at the end of the year, they'll include their salary from their company and they will get a deduction for the PAYE that was deducted by their company and paid over to revenue. The director will essentially then have no tax liability owing on their company's salary. However, where a company that has availed of the debt warehousing for PAYE and PRSI in 2020, including that on the director's salary, the director is not entitled to a credit for the PAYE deducted. You're only entitled for the credit when it has been paid to revenue. So it has been deducted from the director's salary, but because it's warehoused, it hasn't been paid to revenue. So the impact of this is that the company owes the PAYE PRSI to revenue by agreement under debt warehousing, not an issue. However, because it's not paid, the director will now have a personal income tax liability that they will owe to revenue as a result. Now, the imbalance is that the director hasn't received that money to owe it to revenue because it's been deducted by the company. So essentially, you have the debt due by two different entities, the company and the director. It also potentially impacts a preliminary tax calculation for 2021, 2022, because again, if you have a tax liability, you now have a preliminary tax obligation. So definitely have a look at that before October. Don't wait until the end, the last minute to check that and to see what the position is. A director may have the option to warehouse their income tax liability if it arises, but they will have to show that their income in 2019 or 2020 has decreased by 75% on 2019. So again, you're going to have a situation. We were in a COVID situation last year, coming up to the end of the year, things might have looked better. People might have taken bonuses and things like that. So maybe the salary hasn't decreased as much. However, if it has, that's fine. You can avail of tax warehousing. You can kind of balance it off, then pay it down, and the company can pay it down eventually. And by the time it's paid down, your income tax will be warehoused. The company will have paid the debt, and you'll get a new assessment. It is just something to look at before your tax returns, before October, before November, because it is going to be a problem. And revenue really have been petitioned a bit, and at the moment they remain adamant, that it's a piece of legislation that's there, and they're not really willing to move on that. and changed the legislation for a temporary circumstance. But they are quoting, the income tax warehousing is available, and that should be the solution. I don't know that it will be the solution, so I would be cautioning. We've been cautioning our clients about this for a while, and I suppose it's just to flag it with people because you may not be aware of the impact of the debt warehousing on a director's personal income there. Sorry to be a scaremonger, but I think it's important to know, with a couple of months towards the tax deadline coming up. So on a good news, I suppose, thing after that is that from the 1st of September, there is a new support, the Business Resumption Support Scheme. And the Business Resumption Support Scheme is effectively going to kind of take over from the CRSS because restrictions are being lifted, businesses are reopening, and they no longer qualify for the CRSS. There are still businesses that qualify, but again, it's becoming fewer and fewer. So the BRSS scheme is going to operate very similar to the CRSS scheme in that you will calculate your average weekly turnover for 2019 and you will then make a claim based on that. Registration for making a claim will open from the 1st of September and that will end on the 30th of November. So 1st of September to 30th of November, that's your window for making claims. Now, it's a little bit broader than the CRSS scheme on who's eligible. So you have companies are eligible, self-employed individuals are eligible, charities are eligible, approved sporting bodies are eligible, and partnerships are eligible. So I suppose a couple of like charities, approved sporting bodies wouldn't have been really eligible for the CRSS, but they are eligible for the BRSS. So it's a little bit broader. And it gives a little bit more scope for people that will qualify for this. So general criteria, again, all of these supports follow a very similar qualifying criteria. You must be carrying on a trade activity. The turnover again must be reduced by 75%, and the period in question is from the 1st of September 2020 to 31st of August 2021. And that's compared against your average weekly turnover for 2019. The business must not be eligible for a claim under the CRSS for any week that includes the 1st of September. So effectively, you must have signed off the CRSS before you can qualify and be eligible for the BRSS, all these initials. So that's how that's going to work. Like I said, the portal, it's going to be on ROS, okay, that will open from early September and you will register your business and then you will make your claims on ROS in a similar manner again to your CRSS claim. And again, the application periods are from the 1st of September 21 to the 30th of November 21. So again, have a look at the eligibility criteria. If it's relevant for your business, do get on it and get claiming and get the claims in as soon as possible. So I suppose how they're going to calculate it. And again, I suppose the calculation and the comparable period will vary because they do have, okay, so what we're looking at is generally it'll run from the average weekly turnover from January 2019 to 31st of December 2019. That's an established business. If you're a new business, they have some variations on how to calculate the turnover for comparison period. Again, they have a guide there which gives all of the examples on how to do that. So an established business is a business that was in operation prior to the 26th of December 2019, and a new business is one after the 26th of December 2019. So again, you can see that they will have to do that. But again, it's going to be similar to the other schemes that they had, the CRSS, the EWSS originally. They do make account and take into account different circumstances for businesses on how to establish that. So they are trying to make it as broad as possible for businesses that would have otherwise qualified. So the calculation then, so for turnover, average weekly turnover of up to 20,000, you will get 10%, 3 times 10%. Okay, so that's your 2,000, 3 times that will give you your 6,000. I should actually put 6,000 next to that. And then for your average weekly turnover, that is over 20,000, you'll get 3 times 5% of that. The maximum claim for any one claim is capped at 15,000. So that would be kind of an average weekly turnover of 300,000 at your 5%. Okay. I can see some questions coming in, so we will try and get to some of those in a moment. So other qualification requirements, again, all very, very similar to other schemes, must have a tax clearance. And remember, tax warehousing doesn't impact your tax clearance. You must have been actively trading on the 1st of September and you must intend to continue. Again, can't be entitled to the CRSS for any week commencing from the 1st of September. You must register on Ross for it and you must apply for the claim on Ross. So it is all online and you must do it that way. Again, there is quite a substantial guide available on the revenue website for this, on the BRSS support scheme, that will go through all of the different permutations depending on your business type, when it was established, how to calculate your average turnover. Again, they will look at other qualifying criteria like level of business orders as they have done previously. Okay, so again, whatever is most appropriate to your business, you will need to look at it. For me, I think that turnover is the clearest one because level of business orders obviously can be quite subjective, whereas your turnover is matter of fact and it's there. But again, you know, we have clients that have had to go on different basis because their specific industry turnover would not have reflected the drop in business for that particular business, you know. So, but it does mean you might have a little bit of a harder case to do it if you have verification checks and things like that. Okay, so I think before we go on to finance and loans, okay, I'll have a look at some of the queries here and see if we can answer those now while it's all still fresh in our minds. Pop in questions throughout. Revenue recently announced a new eligibility form. Will the return be prompted on the Revenue Online site? And if not, where do we get the form? Okay, so the eligibility form is available on Ross. So when you log in to your Ross account online, over typically, and now again, it might be slightly different because I'm looking in as an agent screen, but again, this is generally where you will find it on your home screen when you log into Ross. Over on the top right hand panel, so you have all your headings along the top and you have a panel here, and over on the top right hand panel you should have EWSS claim, and then underneath that there is an EWSS eligibility form. It should be on that panel on your home screen. You click into that and the form then will appear and you will click and you will go through that. I have had 1 or 2 clients that when they went in, the form wasn't there. It did require them to contact the Ross technical helpline, and they were able to update that at their end. So just in case, if you have been claiming the EWSS, you should have a box there with EWSS, being able to access the claims and things like that. And there should be another line item underneath that. If it's not there, perhaps contact the Ross technical and get them to look, because like I said, I did have 1 or 2 clients that when they went in to look, it wasn't there, and it was a technical issue, and they contacted the revenue and the Ross technical and they got that sorted for them. So hopefully that will answer that question there for you, Michael. Okay.
It's not on my screen, that's why I was asking. I can't,
okay.
I can't find it.
If it's not on your screen, definitely contact the Ross technical, because like I said, there were 1 or 2 people and it came up and there was no reason it shouldn't be there, because they have been, say, claiming the EWSS all along. They're continuing to claim it and it just wasn't there. So look, technical glitch, but they got it sorted really quickly for them. So if it's not, to give them a call. Okay. The CRSS was confined to businesses who paid municipal rates. Is the BRSS similar? No, it's not. You do not have to have a rateable premises. Okay, so that is a difference here on that. It is open to more people. You do not have to have a rateable premises with that. So that does open the scope for people on that. Is a self-employed person receiving PUP eligible for the BRSS? Receiving PUP. Okay, so if you're receiving the PUP payment as a self-employed individual, you're entitled to earn up to 960 per month. I expect, okay, again, I don't have a definitive, but just looking at that, and I can come back to you on that, Kieran, but I expect, okay, that no, they wouldn't. You would have to sign off the PUP payment to get the BRSS. They're trying to, I suppose, one of the things, and we'll be covering that in a minute, with the PUP payment, okay, when you sign off that, you do get an enterprise restart grant of €1,000 to sign off the PUP payment. If you sign that off, if you sign off that, you would then most likely qualify for the BRSS. But typically, you can't be receiving another payment and getting the BRSS at the same, any of them, you know, you get one, you don't get the other. So I would expect, Kieran, that is the case with it. But I can check it out and we can come back to you directly through Joanna with it for you. Is that all right? Perfect. Thanks. When companies have stopped their EWSS or the BRSS because they go over turnover limit, can they rejoin if they did? Okay, so yes, the EWSS and the BRSS, okay, so again, part of the monthly review here is to see that you are in line for that month per the projected versus the actual. If you happen to have a bumper month, unexpected, and you go over the limit on that month, then you are required to sign off the EWSS and again the BRSS. However, if circumstances change and maybe you thought, okay, look, things are looking better, I have a number of orders coming in, that's going to come through, that's going to work, and you know, I won't meet the turnover reduction as a result, which is great. However, things change, something happens, and the following month you have the drop again, and you're actually not going to meet the turnover limit now for the period. You can sign back up for the EWSS. So it is an on and off and on and off one, you know. What they look at is the comparable period, I suppose, for the 6 months. So at the moment, the 6 month period we're looking at is from July to December. Do you expect your turnover to be down 30% in total for the period from July to December compared to the previous period? Okay, so if you go up 1 month, but you're back down another month, that's okay. Okay, so hopefully that answers that question. Does receipt of Fáilte Ireland Business Support Scheme negate eligibility for the BRSS? As far as I know, no, it doesn't. Okay, so you can receive those. So say the Fáilte Ireland Business Support Scheme might be the outdoor dining and that was to facilitate a specific purpose. I don't believe that will impact your BRSS claim again. Again, the eligibility is quite broad. It's a reduction in the turnover down to 75%. It's quite broad. It is quite broad and open, and certainly, again, they're looking at. We go back there and just look at. Oh, sorry. Just go quick look back here. And the eligibility. Okay, so we are just looking here. Carrying on a trade activity, turnover reduced by 75% between September and August, must be eligible, exclude the CRSS, business resumption, and then you're looking at generally having the tax clearance, actively trading, not entitled to the CRSS. So there is nothing there about must be a rateable business, nothing about Fáilte Ireland or other supports. Again, these are specific funds that were granted for a purpose. These again are more general business supports available. So I don't think that's not going to specifically impact the claim. Okay, so I think I've got to all of the questions there for now before we go on to the next part, which is our loans and finance. I'm just keeping an eye on the time there. Okay. And here we go. Right. Not everybody wants to go and look at getting finance, but look, it's there. These were introduced last May 2020. They're still there. So I suppose, look, it's good just to cover them off. Okay, so you have a lot of these actually were there as Brexit type finance, you know, in anticipation of Brexit, and I don't think they were taken up. Ones were, and a lot of them have just changed over to COVID-19 supports now, instead of Brexit supports. So the COVID-19 credit guarantee scheme, okay, you can see there that the loans here will range from 10,000 up to 1 million, term of up to 5.5 years. And I suppose the benefit here is that you have loans of up to 250,000 are available unsecured. The credit guarantee scheme loan is operated primarily through, it's a Strategic Banking Corporation fund, but these are administered through your main banks, AIB, Bank of Ireland. So actually, it's your bank that you would talk to about that if you're looking at loans or finance. Do mention, look, what are the COVID ones under this that they can administer, okay? Still have to go through the same criteria with, you know, putting a business case to them, your projections, your accounts, your figures and things like that. But I suppose they're geared at supporting vulnerable businesses right now, but that are still viable, and they just need that cash flow to help them over the interim. Okay, so you have a COVID-19 business loan. Again, these are smaller loans, and this is usually for loans between 5 and 25,000. They're coming in through Microfinance Ireland, and again, Microfinance Ireland is effectively administered through your local enterprise office. Benefit with this, you have 0 repayments and 0 interest for the first 6 months. And where you do go through your local enterprise office to process this, you get a reduced rate of interest. So the interest after 6 months is 4.5% APR, which is lower than if you go directly to Microfinance Ireland. And the benefit of going through your local enterprise office is that they can help you and support you in putting your application together. They have business mentors, you know, that they can put you in touch with to help you put all of this information together. They do have templates that you can download for having to put your cash flow projections together and everything. So again, there's a lot of help and support available in actually getting that application together. Again, your accountant, you know, will be able to help you put that together as well. But if you know you want to give it a bash and go ahead yourself, you know, the tools are there and the support is there to do that as well. Okay. So the other ones that we have then are your working capital scheme. Okay, so again, that's kind of lends between 25, 1.5 million, and the benefit of this one is the first $500,000 is unsecured. Again, the working capital scheme, this again is administered through your main banks, through AIB, Bank of Ireland, and again, it can be used for more broader terms. You know, I mean, it might be something that you need to invest in. You know, we've all had to invest potentially in new equipment and protective gears and things like that. So it can be used for things like that. The Future Growth Loan Scheme, okay, there is a fund of up to 800 million in loans available here. You're going to be looking at larger companies here. You're going to be looking at companies that are involved in manufacturing, internationally traded services. Typically, you'll be looking at potentially Enterprise Ireland type clients. Okay, so again, it's a bigger loan, bigger scheme, and it is geared towards larger organizations. And again, you have the Sustaining Enterprise Fund, again geared at larger organizations. This is processed through Enterprise Ireland, and you're looking at loans between 100,000 and 800,000 available. Again, as Enterprise Ireland clients, you're looking at typically industries that are involved in manufacturing, international traded services, typically will have more than 10 employees. Okay, so again, may or may not be relevant, but they're there and just to cover them off. Now, I suppose some of the sector-specific supports, which may be more relevant, I suppose they're eligible to businesses through Enterprise Ireland, again, IDA, Local Enterprise Office, UDAS and Greta. So if we look at the hospitality sector, again, you may be aware, the outdoor seating and accessories scheme. Okay, so there is a grant of up to €4,000 available, kind of giving you 75% of equipment purchased available under the scheme to facilitate the outdoor dining. Now, the expenditure must have been incurred between the 1st of April and the 30th of September 2021. And they are still accepting applications, okay? And it is administered through your local authority, either Cork City Council, Cork County Council, or whichever local authority is relevant for your areas. Now, the closing date for applications is the 30th of September 2021. It is based on expenditure, so you will have to show supporting documentation in relation to the expenditure and the qualifying expenditure, you know, for seating, heaters, canopies, awnings, this kind of expenditure. Okay, so it's not automatically granted. You will get 75% of your cost if it's less than 4,000 or max €4,000. It's probably not a huge amount given the cost that it takes to convert and make your outdoor dining space probably habitable and weatherproof and all of that. But if it's a fund there and you can avail of it and you've spent the money, it's definitely worth doing. So again, you still have up to the 30th of September to make an application on that. I suppose just to note on some of these funds, they make an amount available for a fund. And depending on the level of activity and the number of applications that they get a lot of applications before the 30th of September, and that fund has been approved and gone. Because it won't matter that you make your application today if the fund has already just been gone, because they put a fund in there, there's X amount available. Once it's gone, it's gone. So with any of these, get the applications in at the earliest opportunity, because they will do it by date applications are received as well. So it is important to look at that. I suppose the next one that's still available at the moment is in relation to live entertainment, and that's the Music and Enterprise Business Assistance Scheme. And again, here you have funding of up to 14 million has been made available. Once that fund is gone, it doesn't matter what your deadline is, okay? It is relevant for turnover, businesses with a turnover between the 1st of April 2020 and the 31st of March 2021 must be less than 25% of the business for the year in which the accounts have been filed, okay? So you're pretty much looking at accounts up to kind of 31st of December 2019 up to 31st of March, because those filings will all have been done kind of by December 2020. So that makes sense then that it's going from April to 31st of March. So whatever accounts you have filed for taxes in that period, the 2019 period, the turnover between April 20 and 21 must be less than 25% of that. Again, the business doesn't require to be operating from a rateable premises, which I suppose in live entertainment, that is very relevant. It's kind of geared towards people, you know, like all the supporting people around us, you know, so not only the musicians, but you're looking at maybe sound technicians, lighting, all of that ancillary service and support that's there to actually put on the live entertainment. So again, the CRSS didn't go to meet that for these people, so this live entertainment support scheme is going to meet that. It's a one-off flat payment, and there are 3 different payment levels depending on your level of turnover as well as your business costs. So the 3 levels are 2,500 is one payment, 4,000 is the second payment, or 5,000 is the third payment. And again, based on the individual or the company's specific turnover, as well as the business costs in that period. So the closing date for this is the 1 p.m, very specifically, they say 1 p.m. on the 30th of September 2021. So if this is something that would you feel your business will qualify for, you still have time to get an application in for that. And then the events sector, and I suppose this is geared towards people that support the events as opposed to being the person involved in actually putting on the live entertainment. So again, you're looking at events managers, people providing occasion to conferences, arts and culture, and various sectors like that. Okay, so again, we have a specific fund. It's 11.5 million has been put into this fund. The turnover of the business must be greater than 150,000 or more in 2019. So unfortunately, if the turnover is less than that, it won't qualify. And there are two different streams that you apply for. You either apply for, you're under a business providing services to the arts and culture, or businesses providing services in the broader events sector. You can only apply under one of the streams. So if you feel you do qualify and your business does provide services to both of these sectors, obviously have a look at where the turnover would have been greater from that versus where the turnover drop has been greatest hit from that now, so that you can maximize the payment. Again, it's a once-off payment and it's 7.5% of turnover, and the maximum claim on that is 50,000. The closing date is 31st of August, and again, specifically they say, or until the fund is gone, whichever is earlier. Okay, so if the fund is gone tomorrow, it's gone. Closing date 31st of August doesn't matter. So again, if you feel your business will qualify for this, get it in soon as possible, because you don't want that fund to be gone. I suppose then under other, and again, all of these are kind of finance and money and stuff available. There are other supports available as well, and again, specific industry supports, and these are in the form of, guides, development programs, and general industry specific help available. And again, if you look there on any of these websites, you're looking at Board BIA, Board Cavara, Teagasc, Fáilte Ireland, Department of Tourism, design and craft, and then you've medical devices there under NSA and SAI Global. Again, they're not monetary supports, but they are there to help your business. It might be, just to help other business, help you in other aspects of your business. So there's a lot of resource available on these things. Your local enterprise office, okay, again, this is really good for any small businesses, generally, 15 or less employees qualify here under these. The trading online voucher, if you haven't availed of it, do look at it. It's up to 2,500 grant, okay, to help get your business trading online. But also it can help you with getting upgrades for any online portal that you may have, as well as getting digital marketing strategies and other supports that you might need to actually, drive the business online. You've a Lean from Micro, okay, this is a program here that they do, and again, that can help businesses, create more efficiencies in their system, reduce costs, and it might help with new remote working, physical distancing guidelines. If you're an Enterprise Ireland client, you can avail of up to €5,000 towards the cost of financial planning, looking at your projections. And again, this might be in keeping with if you were applying for any of the COVID credit guarantee schemes and things like that, where you're an Enterprise Ireland client. And again, huge amount of support from local enterprise office, and I just got a newsletter yesterday and I thought it was interesting the amount of things that are available over the next couple of weeks to help businesses. So you've the Trading Online Voucher Scheme, an information webinar. So if you haven't, you have to do the information webinar first, so get that booked. If you've previously availed of a Trading Online voucher, you can apply for a subsequent one now, okay? So don't think that previously you could only do it once, but now with COVID, you can now avail of the second one. They're looking at digital strategy and planning, costing, pricing the product or service, a lot of social media stuff, getting started on Instagram, TikTok. There's programs here, Women in Business Success Program, email marketing, Canva, Facebook, Export Compass series. So there's a lot of stuff coming up. And again, do keep an eye on things like Enterprise Ireland, SkillsNet, and again, local chambers, including, you know, Cove and Harbour Chamber here, because there's a lot of information that can be had in these webinars that can help you with your business, give you ideas, and just see how other people are doing things that might help you. And again, some other general supports available, again, from, you know, government departments, you know, a lot of templates, a lot of checklists, again, industry specific things that you can use. Again, some of it may be relevant, some may not, but it can get you thinking about how to deal with it. And particularly now, as people are looking to maybe get people back into work, into the office, where you're looking at possibly remote working, flexible working hours. The Law Society has a really good checklist on all of those things, because there's a lot of HR involved in that if you're looking at changing people's contracts and things like that. So it's a really good way, a starting point for you to go, how am I going to deal with this? Go on, get these templates, get these checklists, and at least have a starting point, and you can go from there. And then just finally on this, the social welfare payments and supports that are still available. I suppose the PUP payment, no more applicants now after the 7th of July. Okay, so it only accepted new applicants. Anyone on it that's on it is still on it, but nobody else can come back on it now. And for any students on it, the final PUP payment is going to be on the 7th of September 21. So once they go back to college, that's it, they're off the PUP payment. There's the Enterprise Support Grant, again, that's for self-employed people that are availing of the PUP payment. If you come off it, you get a €1,000 final payment. COVID illness benefit payment is set to continue until February 22. And then any business has that may have to put employees on short time and reduce employees' working hours. The employee there may be entitled to a short time work support. Okay, so it's about €81.20 up to €81.20 a day for the hours that they have had reduced. Again, it's a type of job seekers payment. Okay, so look, it's just kind of to round off the other aspects there from the employee side as well, if you still need to make some decisions on things like that. So hopefully that has covered off everything that's available. I think you've another one there. Where does one apply for the last music sector grant? That is through the department. Give me a moment and I will tell. Where is it through? It's through the Department of Arts, Culture, that one, the big long name. So it's through that. You can apply for that one. If you just Google the name of the grant, it'll actually pull it up for you, but it is through the Department of Arts, Culture and things like that. Another very good website for reference is gov.ie Department of Enterprise, where they actually have links to all of these different supports and things as well. That'll bring you into revenue supports, that'll bring you into all of the different industries, specific ones. So, and again, you know, it's coming from a reliable source and should be up to date. You know, some of these things change on an ongoing basis. So hopefully I have been able to give you a good whistle-stop tour on all of this. And
thank you so much, Carla. That's been very informative.
Not too over time or under time, but look, there's a lot to cover and there is still a lot available. So, you know, it's good to know.
Yeah, but it is a minefield, as you said, and there's just so much that the government is giving to everybody, but it's just for you to be able to explain it the way you did has been extremely helpful. So thank you so much for that, Carla.
No problem. And look, I appreciate after this, as you're looking at things, okay, if you do have stuff, our contact details are there. Look, feel free, you know, to get in touch with us, drop me an email or something. If there's somewhere I can guide you to or give you a quick help on, it's not a problem. Look, we all need to support each other these days, irrespective, you know, where we do have to do that, you know. So I'd be happy to point you in the right direction for something.
Lovely, Carla. So I think you've answered all the questions anyway, so which is great. So if anybody else has any more questions, maybe now would be the time to put them into the chat before we finish up. So I suppose just to give a brief there on Cove and Harbour Chamber, we have a good few events coming up. which are planned for the next couple of months. So, and they're all through our website, the covenharbourchamber.ie, and you can also email into the chamber. And if you'd like to receive our weekly newsletter, we can do that. Just simply email into the office, info@covenharbourchamber.ie. So our next social event, which is going to be quite entertaining, is going to be over in Spike Island on the 3rd of September. But bookings are essential because we're limited with spaces due to COVID. So again, just go onto Eventbrite or onto our website. And we have also a lot of breakfast meetings, a lot of guest speakers coming up. And again, they'll all be on our website. So good morning to everybody. Thank you so much, Carla. And great to see everybody online this morning. Thank you.